All right, welcome everybody. This is your Market Inflections weekly webinar here, where we go over trades that we currently have on with our Turning Point Signals service, and then we also kind of give you guys a further look as to where these signals come from and why these signals start happening. So again, Alex here from Market Inflections. And we'll go ahead and take you through some trades. A lot of interesting things are happening in the markets right now. We are consolidating. We are consolidating quite a bit here. And I think one of the biggest charts that we have to show this is this IWM signal here. And you know, this is going to be our freebie trade here for you guys. We're going to start the webinar off here by giving you guys a free trade. That you guys, a free idea here, basically, that you guys can go ahead and take and hopefully make some cash off of. Alex, here, you want to set this up for them for the indexes here and how we're looking here going forward?
So there's a couple just nuances to this particular setup. First off, the duration of this signal is probably going to be a couple months. So that's why it's on our high alert, is because some of the numerical rankings involved with this signal are quite high. So when we see this, we prioritize this as a potential way to allocate our capital, because it tells us that the next move will be pretty substantial, at least in time going forward. Second thing, remember, these compression signals that happen after consolidations have formed a specific signature are telling us that the market isn't biased up or down at this static point. This basically shows an extreme non-bias of trend. So when this starts to move up or down, it's going to trend, and it's going to trend in one direction for some time. So the conservative way to play this would be just a straddle, bet on movement, and if you were to use any other tools to build your own bias, you can basically bet on this going either way. Remember, the banks make up a vast majority of the IWM nowadays, and interest rates basically are walking lockstep with the banks. So this is essentially a proxy for a treasury trade, a treasury compression, or interest rates in a lot of ways, but we believe that there's going to be some big movement here. Now, with the Fed doing whatever they're doing, it could be kind of a catalyst here going forward. Now remember, there's higher time frame signals that we've kind of alluded to, maybe not in the last webinar, but there's top signals in the NASDAQ and the ES, which essentially give us a slight bias that this signal should break to the downside.
Okay.
So that's my 2 cents.
Right, and for you options traders out there, any of you guys know, I mean, when you have a big expected move coming, but you're unbiased on the direction, what's the best way to trade it? What's the best way to trade it? I would go ahead and immediately look. By the way, for some reason, I don't even like trading the IWM, but I would immediately go to the SPY. I'd take a look at these options, and I'd be like, all right, I need to give this a little bit of time. I know this is going to be a month move, maybe a 2-month move, so I want to go at least out to May. That's kind of where I want to go. And by the way, now SPY, you got your weeklies here now, Wednesdays open. That's why you see so many strikes here. But we go all the way out to May, and you take a look at the straddle. Now, the straddle, for a lot of options traders, right, newbie options traders, you guys might look at these options and be like, this shit is too expensive, right? I can't play this stuff. But try to stop thinking like that. I'm going to give you a perfect example of a alert actually we just pushed out on the Alibaba that worked out really well. We paid a good amount for the option, but you still get a solid percentage move on your actual trade. Now, if this move is as big as we think it is, which again, we do think the movement outside of the range here is going to be pretty explosive, either to the upside or the downside, you're going to make back, you're going to make double or triple here on the leg that's working, And ideally, you be able to shave some of the premium off and not take a full loss on the other side that is not working. The problem, though, with most people playing straddles, and again, Alex can attest to this, is that right before these moves tend to happen, well, guess what? You're going to get little breaks of ranges and fake outs and things like that, where they'll have you believing you're getting the breakout to the upside or you're getting the breakdown to the downside. It's always a matter of timing. This is where the straddle solves that problem. As long as you can hold yourself to the freaking straddle, which a lot of people cannot do. You guys want to be right exactly on time. And the straddle affords you the ability to have time, number one, and then no bias whatsoever. Now, are you going to make as much as you would if you guessed it right completely? No, but come on, you're not an asshole. Are you an asshole? Like, let's take the right trade here and let's keep the risk here to a minimum here. So that's going to be your free trade here going forward here for the next couple of months. This is probably one of our best ideas. We're even going to push this out to subscribers as well, but we're hooking you up with it free today here. Moving on, let's go to the Alibaba. Alibaba was a recent trade here we made and sent out to subscribers to buy the 110 call for May. We'll take a look at that in a second. And the signal was a compression back down here at around 104 and change. Stock already moved up to 110 and then just kind of had a little bit of a pullback. The reason why I wanted to get back in this trade and revisit this trade here was simply because some of the options flow that I saw just trading BABA. It's been pretty aggressive, and I can go ahead and pull out some some interesting trades that just took place today even on this 110 May call. Most of the activity here has been on this 110 May call. And if you take a look at this, we sent out the alert at around 350, 340, and this thing traded up to about $5.10 today. I think there's still more juice left in this. If you look back at the 10-day, you can see several buyers here picking up this thing, three and change. I saw this thing move pretty good. This was Friday closing. And I was like, all right, we got to be in this thing. We got to be in this thing. We got to be in this thing close. In my younger days, I would say, I would be playing weeklies. I would definitely be playing weeklies on this. But again, the service that we are providing for you guys, we want you guys to be able to hold these things for a little bit of time, and give yourself time to get in these things. Playing weeklies, and I know Alex can attest to this too, it's a difficult game. It is a very difficult game, and I'm sure you guys can raise your hands on that one as well. So we still think there's upside here, about 112 or 115. The one thing, though, that could destroy this trade completely is if the market freaking crashes, which is always a possibility, especially in a market like this. Who knows what's going to happen? I mean, SPY here, we just showed you guys, has a big compression IWM, so we know these indexes are going to move aggressively. If we have a major move here to the downside, that will definitely break this BABA trade in half here. So, we're always looking to book profits as you go up. You'll also get those signals from us when to go ahead and take 50% of the trade off or a quarter% of the trade off. You always want to be selling into profits, but this has been a very good trade for us as well here. Alex, you got a couple trades you want to throw out to them too. Let's grab some of yours, man.
I'll just recap some of the two that I talked about in the webinar 2 weeks ago or 3 weeks ago, I remember. The ones that were on deck at the time were Williams-Sonoma. Yeah, again, this was a super beaten down name. If I actually, unfortunately or fortunately, have to look at the fundamentals of some of the trades that I put on. This company still makes profits. It is kind of in the slide, death of Amazon. But as you guys see here, it just got overblown to the downside, and we caught a nice edge that this was going to move. Now, it could have moved down or up, but I knew it was going to have range expansion. And so, it was just my nature to go long some of these stocks just because they've already seen such a big drawdown. So that's just something I'll point out. Also, just for context, I normally operate a long portfolio that I hedge intermittently. So if you sense a sort of long bias in my view of a lot of things, it's basically because that's what I'm paid to do.
Indeed, indeed. Him and I have these arguments all the time too. I'll always Skype him and be like, "Dude, why are you so freaking long biased?" It's funny though. His partner is so freaking short biased. There are a lot of us traders have emotional attachment, obviously, to
Mhm.
certain feelings that we've had in the past. I've made most of my money on the long side. However, when I was a day trader and I was scalping, and we could just scalp, 2,000, 5,000 shares of whatever, and the market was crashing in 2008, that was like where I made my name, basically. So I always have an affinity towards markets crashing for some freaking reason. I don't know why. Maybe you guys can explain to me why.
So that was a good trade. JetBlue also on daily had a nice little kind of move. It kind of struggled here out the hole, but
Yeah.
not too bad. Um,
Okay.
we did get some movement. So that was interesting.
Nice. Nice. So we
Some
got a
of the
couple.
bigger, yeah, some of the bigger things that are happening that I'll show you guys is the NASDAQ has just been on a tear. And so there's a lot of stocks inside the NASDAQ that have just really had a tremendous run
Yeah.
from the middle of last year. Adobe on the upper left being one of them. The
Yeah.
semiconductor sector has just been on fire. I mean, it's kind of been this silent bull market that I don't see a lot of people talking about. Internet of Things is what they kind of coined it.
Yep.
NVIDIA, Adobe. And so, this isn't necessarily a short signal. It is most definitely if you're long, might as well take some off the table type of signal. But what this signal suggests to me is that Adobe should at least go sideways here for at least a quarter, maybe a half a year. So if I'm trend trading this thing, I want to either adapt my strategy to not trade that type of way and look to play ranges going forward. One of my favorite trades in a situation like this is just to iron fly or iron condor right here.
Nice.
Yeah.
Nice. Another, I think to me, I mean, I look at the price action in Nvidia and AMD. Like, I kind of think for now, some of the big juice is kind of over. Like, if you look at
Mhm.
Nvidia for the last 2 years, you're talking about a $20 stock that went to 120 bucks. Yes, it's still great, and yes, it still has all this shit and all that kind of stuff. But
Mhm.
once people start to book these profits, it gets a little choppy. There is one thing that we want to bring up that I know we're getting a lot of questions for already here, is the Tesla. Let's show, we want to show you guys too where some of this science gets run over, gets completely run over, and this is where
Right.
the context of the trades come in. So this is where the expertise of the person who's using these signals here to push out these alerts for you guys will really start to help. This Tesla has been on a monumental run, since a pullback at maybe 240, which happened, a couple of weeks ago even. And we have been getting top signals on this thing every single day, basically every single day, a 60-minute top, a 130-minute top, a 195-minute top, whatever the hell it is, we have been getting tops on this thing every single day. And it's difficult sometimes for us to look at these and be like, all right, we're not going to take this because, this is just one of those names. Chipotle is another one of those names that can just totally run away from you, if you allow it to. That Chipotle, if you look at a 2-year, this thing it hasn't been at 450 for the longest time. And there's a lot of shorts, I'm sure, still stuck in this thing. And any push here to the upside can create a lot of market pressure, can create a lot of market orders, shorts that want to cover, new longs that want to come in. You could see this name at 500 extremely quickly because it's so illiquid. So oftentimes, if I see we're already seeing a topping signal here on Chipotle, I might delay. I might not push out that alert. So just to give you guys a little bit of science on which ones I'm choosing. I'm trying to curate the best ones that have options flow alongside with them, that go along with the trend of the market, whether we're consolidating, going up, down, and that's how we'll kind of cherry pick the best sort of alerts here for you guys. The Amazon was another great example of a compression that just went buck wild, and this thing ripped, 60, 70 points off that move. So a lot of tech names here are still looking good. The question is now, what's going to be the stone here that that overturns everything. There's a couple other trades that we have on right now, and I'll go ahead and throw those out there for you guys. We got Visa and we got Microsoft, and both of these are straddles, okay? And I'll always play the straddle if I don't want to be biased on a particular direction. Microsoft, there's tons of call buyers out there, but the name still hasn't moved yet. You can take a look at Visa here. We got a nice compression here, but the name still hasn't moved yet. Same thing down here in a shorter time frame. The name still hasn't moved. And you notice here too, you got a top here on the weekly, which kind of says, hey, maybe this compression here will break to the downside. Alex, you've seen this a lot, right? You've seen a longer time frame.
The rule of thumb is the higher time frame is in control, and that can be interpreted in a lot of ways. But essentially, what we're looking for is anti-persistence or persistence over a scale. So on a weekly scale, there's a lot of participants that have already gotten long this name by the time you've seen a weekly top. I mean, it's investors, it's day traders, it's pension funds. They've all gotten long, most likely, and that's why you get those top signals. And then what I like personally is not necessarily shorting on top signals, because at its core, it's not necessarily saying that it's going to completely reverse just on that weekly signal.
Right.
What I like to say is, okay, let's try to short on a compression. Now, the reason why that might be more advantageous is because a compression says this is going to start a new trend from this point. So you could kind of see it's using two signals that we have a very high edge in to make a calculated trade. It comes with experience looking at these things, and it takes a little bit of just understanding to the context. Like Tesla, for example, 60% of the short is float in that thing. So every time it ramps up, there's people getting squeezed and have to, people calling them saying, why are you short this thing that's going, just got upgraded twice? And yeah, so it's one of those things that just takes experience looking at a lot of signals.
Absolutely. And again, that's what we do for you guys, by the way. So when you guys take a look at marketinflections.com here, this is what we do for you here. So we're essentially taking these signals, we're combining them with our market expertise here, and we're finding here the best signals here that are going to result in some good moves for you guys to capitalize on. All right, so I'm going to go ahead and send you guys the link here. You guys can go ahead and get 50% off for your first month. And then we're going to discontinue this, by the way, next week. So I think next week will be the last time that you can take advantage of this. Again, this is what we do here with Market Inflections and with the Turning Point signals here. We take signals like this, we wrap our own expertise around them, we add in where the options, where most of the options players are going, and that's kind of where we're at here. Track record is down here as well. You'll see trades that we put on since January. And if you guys want a little bit more science on it, and you want to check out the actual software, which is what we're showing, you guys right here, we can also do that for you as well. The last trade here that we're going to throw out there is the Microsoft. And again, Microsoft is a name here that I've actually been long for a good amount of time. I've been in and out of this thing long for a pretty good amount of time. It doesn't look like it's on this particular sheet here.
You can just go to the one I sent. Yeah, it's on there. Another thing that's pairing with Microsoft right now is Intel also has a compression. So there's sort of, when you see, again, from experience, when you see a lot of stocks in the same group get a very similar condition, we look for them to move together, but also one of the biggest edges I've found is if they all start going and there's one little laggard left behind where some manager needed to punt a bunch of stock one day and the other ones kept going, that's a chance to get in something before it slingshots higher. So
yeah, the dogs of the sectors usually.
Right.
They always get the rotation last, but they still get a rotation.
Right.
So you gotta just wait patiently for the timing on that. So you notice all the compressions here on Microsoft. Again, we don't know exactly which way it's going to break. I do like the long side. I do favor the long side here for Microsoft. Considering the amount of call flow that I have seen, buyers are buying Mays and they're buying out to 70 calls on this thing for June and July. You know, but again, anything can happen here, and that's why the straddle is the best way to play it. Most of the trades that we have on right now, actually, Alex, are freaking compressions, and it's not surprising because the market is doing what? The market is consolidating. The market is giving us this kind of range-bound trash. You got to pick a sort of diamond in the rough like a Tesla here on a daily basis, which we're able to find as well. We got a lot of short-term signals coming off as well. Today there was a lot of juice here in some of the solar names. You know, so we'll be able to pick up on these as well. Day trades you'll get, couple day trades you'll get, but the ones that we focus on mostly are some of the swing trades. And let me tell you something, the next batch of swing trades, it's all going to be determined by which way the market moves. And when you're in this kind of point, it's a difficult point to be in, because if you already have a bias, let's say there's a long side, most people are still long bias. When we get in these type of areas here, Alex, what's your recommendation to a lot of folks who are heavily long bias? I say this market.
I mean, you're in the same camp as I am. I'm operating, you know, most of my portfolio to the long side, so I intermittently hedge that using SPXU or even sometimes options, but typically I'll probably just go to the SPXU. Again, the SPXU is just the triple short inverse SPY, and I very rarely hold that, and I don't hold more than essentially 20 or 15% of my portfolio, because it does have a fairly large decay. So it's really only utilized for points where I'm you know, better than fairly confident the market should have a move down. If this starts going back to the upside, we break 140, you know, I'm quick to get out of that thing as well. So
Yeah.
it's, again, really just to smooth out my equity curve, not meant to be a primary trade.
Right.
Now, I don't want to have all just completely short ideas here. A couple ideas I thought were interesting would be the Auto Nation bottom left.
Okay.
This is a weekly bottom signal. The car stocks have just been getting obliterated, and I've actually been kind of getting a little swung around in this thing for a while. I actually took a long back in that compression mid 2016, and you could see it started to go to the upside and just completely collapse. So I've already stopped out on this thing once in the last year, and it you know, it has a lot of problems with the inventory. But you know, one of my favorite plays in the option world is when I get these bottom extensions, I immediately start thinking about put spreads. So I could usually set something pretty far out. You know, about 45 days is generally what I'm looking at.
And when you say put spreads, you mean writing them, correct?
Right, correct, writing them. So I would write, I don't know, depends on this, maybe a few dollars wide, and try to get at least 30 cents on the dollar of the spread, and look to not let it go completely to expiration. You know, I'll try to buy it back at pennies on the dollar, but really try to work in some theta within my portfolio where it's more non-directional.
Yeah, we also do this as well. So when we send out a strategy for you guys, for example, let's say we're long BABA, we'll also send you other ideas to shave premium as well. So if that's, you know, something you guys are looking for, that's something we do as well. I'll give you a perfect example on the BABA. You know, we advised subscribers here basically to start writing you know, some of the April monthly out of the money puts here. So you can find that you can go pretty further out of the money here. Give yourself a little bit of space, and then you can see all the premium here that'll come out for this thing. You know, I think we wrote this thing at about 75 cents or so, and this thing most likely is going to dry out. You know, is going to dry out to zero. This stuff we love. I love this stuff. This is when you're confident on a direction, or you're confident on let's say a range-bound trade, and you can just shave some premium. You can do this on a weekly basis too. If I were to trade weeklies, guys, I wouldn't be fucking buying them. I'd be freaking selling them. I'd be selling them all the time. You know, because 8 out of 10 times you're going to be right on selling it out of the money weekly. Now the shitty part about this is, if you do get caught in a move in the wrong direction, let's say you get caught on an Amazon short call, and you're too damn stubborn, and you want to average down to these things will rip you apart to shreds here if you do not have your risk and you do not have stops, and you do not adjust quickly. You never want to get stuck in sort of a directional breakout or a directional breakdown while you're writing options here. That's the difficult trade, and that's why using these signals is so advantageous, because when you get such a powerful signal here on a reversal like this, you know, you can really shave far away premium here, and it's a pretty safe trade. That's probably the safest trade in the book here, I would say. Alex, would you agree?
I mean, AutoNation doesn't even need to stop going down. This could probably go down a few dollars, and you know, we're expecting the IV to get crushed here. So looking for like a 30 to 40% IV crush. Now, what's interesting about these bottom signals is they're kind of market sensitive, meaning sometimes there's not a lot of them. If everything in the market's going up, you know, there's very rarely going to get these bottom signals back. You know, when the oil catastrophe was happening, there was, you know, 20 a day. So then there's almost too many to try to pick from. So that's when you kind of got to look at what the option structure is.
Indeed.
Were we going to talk about?
I think we'll leave IBB for later. Let's leave the pharmas here for later. Let's leave them wanting here, guys. Just be on the lookout here for some of the pharma names. Some interesting stuff is going on there as well. We gave you one free idea, and it's pretty damn sweet. I'd go out to May, go out to June here, and play a bit of a straddle here on the indexes. You will get paid very handsomely once this market figures out what the hell it wants to do. And these signals are showing us, you know, that time is almost upon us here. We're going to be taking this trade as well. It's not going to be the easiest to figure out exactly where we're going to break. That's why the straddle protects you. And again, this is what we do here at Market Inflections and Turning Point Signals. We try to give you the best signals here, and also add them with other science, other expertise, and then give you the trades as well. Give you the trades, give you the exit plan, give you the strategy, and that's kind of what we do here for you guys. Remember, you have the link here, marketinflections.com/launch, and you can go ahead and take advantage of 50% off for your first month. This is going to be going away for next week. You get 2 to 3 equity signals trades per week. You get an option strategy for each one of the signals. Again, you get a plan here, email alerts, you get access to a private Twitter feed, and soon enough, all of this is going to be available for you on an app-based platform as well. If you guys want the actual software, or you want to inquire about the software, go ahead and hit us up as well. And that's about it, man. That's about it, guys. Let's you know, try not to catch yourself on the wrong side of this particular trade. Don't be stubborn either. When we do break out of this range, IWM or the indexes, chances are we're going to have some serious follow-through, downside or upside, and it's not something that you want to just fade. You want it because, again, I know a lot of folks are looking to fade moves because, again, we stay range bound for a while. That trade works. But when that vol is ready to explode, there's a lot of opportunity there. And on the converse here, if you're on the wrong side of it and you're stubborn about it, you're going to get freaking rolled over several times over here. Alex, any last words here you want to throw out?
I'll just show one little nuance. If you zoom out of this and go to that DPZ chart,
yeah, which one is that?
Yeah, right here. Blow this one up. This actually shows a more mature trade. And as these signals evolve, there's a capability within the software to show us a trajectory on where the stock should be moving given the signal. And that's in that gray dashed line there. So again, we didn't take this trade, but this is a good example of a trade that's very similar to IWM right now. If you just, you know, covered up the ticker symbol and I showed you two charts, it'd be very, very similar. That's why I wanted to show this, where you had a top signal, market consolidated, and then it broke out. You know, it took a few bars to start going, and that's the kind of nature of this. It's predictive. It's not, you know, after the fact. It shows you something's going to happen before it does, and then the market releases that energy. Now, if we were long the straddle, where should we take this off? Well, we don't have to guess at any point in this process. You could see that as this moves down, the trajectory over time is pointing to about 170, maybe even 168 at the
Right.
bottom. So when price reaches that trajectory, that's when we would look to systematically take profits, at least on the put side.
There you go. There you
So
go,
that's
guys.
it. Stay mechanical, look for edge.
Awesome. Awesome. All right, guys. Hopefully we will see you soon here. Again, you can check out blog posts here on the website as well. Those are updated on a weekly basis too. So we go ahead and explore a lot of different signals and a lot of different trades that you can kind of check out and see the sort of science behind it. All right. So we'll see you around, and next week, same time, we'll see you here for our weekly wrap up.